Hi guys, thank you for joining me again today for this educational Loom video. This is a follow-on from last week where I spoke about the Business 101 cycle. And just a quick recap, this is essentially around how we can essentially turn our assets into profit and then into cash. And the idea being that the faster that we can get this cycle spinning, the higher our return on investment is going to be. If you didn't get the opportunity to see that video, I have posted a link to it in the comments, so feel free to jump in there and have a look when you get a moment. But today I wanted to focus on the asset and profit side. So this is one of the key concepts behind the Business 101 cycle, and the idea being that we want to to utilize our assets as efficiently as possible to generate the most amount of profit. And this ties quite nicely into the 7 ways to grow your business. Now, there are sort of 2 ways you can look at it. One's being on the profit and loss side, and that's what we're going to look at today. There's also some areas in the balance sheet that you can focus on. We'll look at that next week. So for today, we're just going to focus on the profit and loss. Okay, so I mentioned the 7 ways to grow your business. As you can see, these are listed out here. On the left-hand side, we're looking at things that we can improve or increase, and then on the right hand side we're looking at things that we can try and reduce or decrease. So if we go through them, if we're able to increase our customer retention, so the number of customers that we retain, we're obviously going to increase our sales. If we're not able to increase or increase the number of customers that we retain, if we can increase the number of leads that we're generating, as long as we're retaining the same lead conversion rate, we're going to obviously increase our sales. If we can't increase our lead generation, but we maintain the same lead generation and actually convert more of those leads, so we find ways to effectively convert our leads more regularly, that is also going to increase our sales value. Alternatively, increasing price obviously is going to increase our sales value. And finally, if we can find a way to sell more to our clients, i.e., we sell more regularly and therefore the transaction frequency is increased, we're obviously going to increase our sales, overall sales. And then on the right hand side, where it comes to costs, if we can become more efficient, so it might be that we send our team on a training day, and as a result of that, they become more efficient and therefore can do the work faster. Obviously, the cost of generating that income is going to be reduced. And finally, overheads. Let's say, for example, we identify that within our organization there's an opportunity to outsource, and as a result of outsourcing that, perhaps it's an administration role, we can actually reduce costs. That's obviously going to increase our profit. So that's the 7 ways to grow your business, and it gives you an overview of how you can increase the utilization of your assets, and also make it more efficient. And what I wanted to do now is just take you through a small demo company, just to show you what it looks like. So bear with me as I move to another screen. So within this calculator, I've already put in some numbers, and these are not real numbers. This is just a generic company, but it gives you a sense of how small incremental changes can make quite a significant difference in your business. Okay, so we're going to work through them, and let's say as a result of working through our customer retention, lead generation, lead conversions, pricing, and transaction frequency, how often we're selling to our customers, we are able to add 1% for each of those things. So we're going to increase it by 5%, right? So as you can see it's moved from the current sales of 1.2 to new sales of 1.31. Here's the impact on cash. So suddenly our cash has gone up by 19,000 and our profit's gone up by 27,500. All right. So sticking with the 1% improvements, as I have talked about in the past, I often talk about the 1% rule. If we're able to increase our gross margin by 1%, so how are we going to do that? As I mentioned, it might be that we make our team more efficient, or we implement a system which reduces the amount of time being taken. It might be that if we're in a manufacturing industry, we're able to reduce the amount of rework that we need to do. There's lots of ways in which we can approach reducing our or increasing our gross margin, but decreasing our cost of sales. So as you can see, let's increase it by 1%. And whilst it's gone up, obviously as a percentage of the sales, we have increased our profit. So our profit has gone up to 590,000 from what was 550,000. This is the impact that change has on our cash. So it's increased by 9,000, and the increase in our profit, 13,100. So finally, we talked about perhaps we can do some outsourcing, which is going to see our overheads decrease by, I don't know, let's put in 30,000. Let's say it's a $30,000 saving as a result of us doing some outsourcing. Down here, we get to the overall impact, right? So you can see those minor changes have resulted in a $50,000 impact on our bank account. Furthermore, our profit has gone up by $70,000 in 1 year. So as you can see, small incremental changes can have a significant difference on the performance of your business. If you need assistance with perhaps identifying where you can make these improvements, or it could be coming up with strategies of how to improve it or implementing these processes, it's all about planning. So do feel free to get in touch with me. This is something I do on a regular basis to support businesses in their journey of growth. Next week, as I said, we're going to take a look at the balance sheet and see how we can use the balance sheet to improve both our cash and our profit. Thank you very much for joining me.